Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is Friday, TGIF, March 15, 2024. In this Kickstart video, I'll take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar. So let's get started. I'm going to focus on the hourly chart for this analysis, and we saw the price yesterday move sharply to the downside. That move to the downside took the price below this level right through here at 1.0900. That level happened to be a low price from earlier this week, and we broke below that level, increasing the bearish bias to the downside. We also, before that, fell below the 200-hour moving average. That's a green line in this chart. The price had held the 200-hour moving average right through here. We broke above both the 200-hour moving average and the 100-day moving average back here. This is going back a few weeks, and that started the rotations. Move to the upside. The trend moved to the upside. We hadn't been close to that 200-hour moving average, but over time with the consolidation right here, it started to catch up with the price and moving below that level. And you can see that the price initially came down to that level, rebounded a little bit, and then broke below that level. That was sort of the catalyst to move to the downside. The momentum continued into the close, where the price came down to a swing area through here, where we had a number of different swing lows and swing highs going back in time, including swing high here, failed, break to the upside, and then rotation, moment, sellers right here against the level before moving to the downside. We returned back to that area right through here where we found support here. We had that sharp move to the downside before moving to the upside on news last week, and then trading yesterday, the price came down to that area and found it started to consolidate into the close. And trading here today, the market did continue its move to the downside. In the process, we moved down to test the 38.2% retracement level, and we found support buyers against that level at 1.08712. And we're seeing a rebound back to the upside. They took the price back up to this area right through here, where we had a swing high right here. Got a little messy here, but then I had a swing low right there at the 109 level, and right now the 109 level is a ceiling on the top side. So as we enter the new fray today, we are in between the 109 level on the top side, which is the earlier low for the week, and that low back there, and the 38.2% retracement. In between, we have this trend line, which I failed to point out, but the price did move below that trend line on its way to 38.2% retracement. It may or may not be in play, but I think really the key levels for today, key barometers for today and going forward are right here and right here. If the price can extend above this level, it's more bullish. The price moves back below the 38.2% retracement. We continue the move to the downside with this level as a target level. Here we had that swing high, fail break. This pattern of failed break and then reestablishing resistance, finally breaking above, and then reestablishing support before moving to the upside. So that level is going to be in play at 108.65, and then we start to look toward the 100-day moving average on the downside at 108.48. So that's my look at the euro versus US dollar from a technical perspective. Watch this area. Let's take a look at the dollar versus yen next, and we saw the dollar yen move higher. Well, yesterday and this week, to be honest with you, we had a double bottom going down here last Thursday. This is 1, 2, 3, 4, 5, Monday and Friday, and that started the rotation to the upside here for this pair. And along the way, we moved above the 100-hour moving average. Did hold support buyers after breaking above that level right through here and here before starting its move to the upside. We traded above and below the 100-day moving average admittedly through here, which is a little bit messy. But the market had to figure out which way it wanted to go, and it figured that out yesterday, moving up to the 200-hour moving average, which is falling here. And we continued that momentum to the upside until we got to the 50% retracement of the move down from this high right here to this low right here. And we found the willing sellers against that level push the price all the way back down below the broken 38.2 and the 200-hour moving average. But that didn't last, and the price started rotating to the upside. So there's a little bit of a messy here. This level should have held support, and once it broke it should have gone lower, but it didn't. And we started the rotation back to the upside. I don't know what exactly caused that, to be honest with you, but it seems like a pretty fast move to the upside. Maybe it was just a failure below these levels. Sometimes it happens too, and it is Friday. So we've since moved back above the 50% retracement level, which I held earlier, and that is going to be a close level of support now for this pair. If the price can stay, especially since we're making new highs here. If the price can stay above the 148.67 level, that's more bullish for this pair. Now, this yellow area that we're in right now, this level is defined by some different swing highs right through here, and maybe going back in time as well. We broke above that level, came back down toward that level, and found support buyers. It wasn't until last week that the price fell below that level after initially trying to find support against this level and then breaking to the downside. And so we're back to this level. You can see how we had two separate bars here. The initial high today, and then this more subsequent high where we increased the range to the upside. We continue to find some sellers against that level. So there's a little mini battle going on intraday here between the 148.67 and 148.88 level. So for traders today in that currency pair, watch those levels. It may give clues, especially since we just broke to a new high. If we break back below the 67 level, you want to see more momentum break below this level and could see a rotation back down toward our 200-hour moving average, 38.2% retracement. It's not out of the question. Conversely, if we do break above the 88 level, we could head up toward the 149.96 level, which happened to be this lows right through here, and maybe some highs through here. So that has a history as well. And if we get above that level, that would be more bullish for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And again, I'm going to take a look at the hourly chart for this currency pair. Here's our 128 level up here, and in trading yesterday and the day before and the day before that, I guess, the price did trade above the 128 level. That's a high of the red box, if you recall. Let's just stay on this level for now. But certainly the buyers had their shot above the 100-hour moving average yesterday when it broke above that level and it's run higher. But then I guess CPI data came out. We started rotation, or PPI data came out. We started to rotate back to the downside. We fell below the 200-hour moving average and saw increased momentum to the downside. We did head down toward this swing area right through here, where we found some support buying yesterday, would correspond with these levels right through here. And in trading here today, we used yesterday's low and these other lows and highs to figure out where a bottom was. We did fall below the 50% retracement of this move to the downside, and we are currently trading below that level through here. It's Friday, I guess. But if I were to following this up here from a technical perspective, this seems to be the level that we need to get to and through. And unfortunately, we also just just below that we have the 100-day move, actually the 100 bar moving average on the 4-hour chart that's coming up there that would need to be broken to increase the bearish bias, not to mention the 61.8% retracement of this move to the upside. So those levels are still going to be in play on the downside. You can sort of blur your eyes and say, well, 200 bar moving average, 200-hour moving average, 100 bar moving average on the 4-hour chart. Those are the two barometers in between the 50% retracement level. Makes sense. Anyway, TGIF to you all. My name is Greg Bogolowski. Good fortune with your trading. Bye-bye.